But for that, let's bring in the senior market correspondent, Kevin Green, for what you're watching this morning as we get up and running for trade for this Thursday. Good morning to you, Kevin.
Good morning, Sam. Yeah, obviously we are seeing some selling pressure here when you're looking at the broader market. Only about 60 stocks in the green so far for the S&P 500, but we are kind of holding up here. Let's see how the day is going to really kind of progress. PPI, yes, came in a little bit hot, but it is a very volatile number. And if you kind of look under the hood, there may be a couple of bright spots here when you're looking at the services inflation that did come in hot, but maybe negligible when you're kind of looking at that report. For today, looking at some of these levels, the first level of support here is going to be 64.40. We're trading at around 64.45 right now, so getting close to that first area of support here. And any further breakdown, you're looking at 6400. To the upside, if we do get some buyers to kind of step in here, we get some good news today. Just overall, you could actually see 6500 as your major area of resistance for this market. But once again, a little bit of a breakdown, not too much of a concern at this point in time, and maybe we will start seeing maybe some buyers trying to step in at these current levels here. These levels have actually been holding up over the last couple of trading sessions pretty well here. So if we're still in that type of dynamic, I think there could be, once again, maybe some digestion of this and then trying to look at some optimism moving forward. And you can also see this within the Fed Watch tool as we are still pricing in 25 basis points in September. I think the big question now is, do we get an extra 25 basis points for the remainder of the year? Or do we cut by 75 basis points or just have 2 rate cuts here? So we're digesting it. Maybe a little bit of a sell-off here. Let's see how these levels hold up for today's session here.
Yeah, as Lizanne Saunders certainly pointed out, there's been no movement really on some of those probabilities as far as that CME Fed Watch tool. It's not just a case of when this is going to be happening. It's obviously going to be a case of how much. I know you're also looking at the yield curve. We've been having fascinating conversations about that, obviously steepening, that 2-year coming down, the 10-year just bobbing around those levels for quite some time now. The 30-year no doubt reflecting some of those concerns about longer-term debt, the fiscal situation, inflation as well, not to mention what we're seeing internationally. What are you seeing there?
Yeah, well, for today, at least starting off this morning, we're not seeing a massive blowout between the 10-year 3-month spread. So the 2-year 10s, yes, you can make that case. That spread's pretty wide. The 2-year 30, it is probably the widest that we've seen in a very long time here. But the 10-year 3-month spread actually has been in this consolidation range. And even though we had some hot data coming out today, earlier this morning, it's still holding within this particular range. And what you want to see if you are an equity trader is you want to see the yield market really stay in a very concise range here. Stability in yields is actually bullish for the equity market. We are at least seeing that for now. Let's see if the commentary from the Fed as well as from the White House over the next couple of days around this inflationary print in the labor market, if that's going to be able to hold. But we have not broken out either to the upside or the downside when it comes to the 10-year, 30-year spread. And I think that's actually over time actually conducive for equities still to be able to hold up, at least for now.
Okay, and lastly, how are you looking at the healthcare sector? Down about 0.4% in morning trade as we get up and running. What are you seeing there?
Yeah, very interesting development when it comes to healthcare. We have seen some positive ETF flows over the last couple of trading sessions, and that does coincide with positive price action to the upside here. Kind of still trading within a consolidation range, but we are seeing a potential setup here where we have a potential bullish cross with that 12 EMA above the 26 EMA. RSI still in a bearish formation, but you have seen some speculative options flows over the last couple of trading sessions within the healthcare space, especially when you're looking at United Health as well as Eli Lilly, both stocks that have been aggressively sold off over the last couple of weeks here, even months, if you're looking at United Health. So this could be a sector that is a little bit more resilient when it comes to the inflationary pressures of the market, and maybe it is consolidating for a base in order to try to break out here. We're not there at that upper end of that range for the XLV yet. That's going to be around $137. But if you're able to get to that level and break out, this could be one that a lot of investors and traders look at in order to try to hide away from some of the volatility that we see in the broader equity market if that were to come to fruition over the next month or so.
Okay, Kevin, really appreciate it. As always, Kevin Green there. Thanks so much for your time this morning.